Oh my God, they have just lifted the US debt ceiling. So Biden and McCarthy have reached an agreement in principle to lift the US debt ceiling. But what if I tell you this is only the start of a possible market crash? What do you think happens next? Okay, before you start panicking, here are some facts. I'm speaking with facts here. It's not my own opinion. What happened the last time when they passed the debt ceiling? That was in late 2021. So once you pass the debt ceiling, that literally means it's like a borrowing limit. That means the US Treasury Department can start borrowing money again. How does the US Treasury Department borrow money? Well, they issue these IOUs that are called, when a country issues an IOU, it's called a treasury bond, right? So they're going to issue a lot of these, which are lots of issuance of US Treasury bonds. And what does that do to the market liquidity? Let's have a look at what happened last time. So this is the Treasury General Account. That's how much money the United States government has in its own personal account, if you want to think of it that way. And see, it's almost coming to zero. That's why they're saying the US was very close to default. Now, see, basically, every time when they are allowed to lift their borrowing limits, the debt ceiling, so they get more money in, right? How do they get more money in? They get more money in by selling treasury bonds, by getting other people to pay to purchase treasury bonds to pay for the US Treasury's borrowing needs, right? So every time we see more money coming in, right? More money coming in. So when was the last time more money came in and the Treasury debt ceiling was lifted? It was in very early January 2022. So a lot of money came into the Treasury account. But what happened to the stock market? Okay, see that date? That's January the 3rd, 2022, right? Market tops, right? It's been massive sell-off since then for about 9 months, right? This didn't just happen to the stock market. It also happened to crypto and Bitcoin as well. Why does this happen? Well, as I explained plenty of times before, that basically markets go up or down. They're like boats in the water, right? Basically, if there's more water in the ocean, right, markets go up. If there's less water taken out of the market, then liquidity goes down. Basically, boats sink, right? So think of it as liquidity, right? It's very simple. Money is liquidity for the markets. And look what happens when. So you have lots of money come into the US government's account, right? And that leaves the economy, leaves the market. So that's why the markets perform so poorly for a number of months starting from early 2022. But however, look at this. In 2020, there was also a huge spike in terms of money flowing into the TGA. But what happened to the market then? But 2020 was a huge bull run because the Federal Reserve was actually printing a lot of money. Do you see the difference there?